This company is broken. It's not even the fact that it's up 7.6x over the last year. It's the fact that they're selling a literal commodity and they're about to be the most profitable company in the United States behind Nvidia and Google. Yes, a commodity. You know, the category of goods like corn, oil, soybeans, the damn cloth that your clothes are made out of. Micron is selling memory. There's a little nuance, but let's simplify it. AI needs a lot of memory to, remember things during your conversation. And as AI gets better and better at having context to have a good conversation with you, you need more and more memory. So 1 gigabyte from Micron is the same as 1 gigabyte from another company and 1 gigabyte from another company. You frankly don't really care where that memory comes from. It could come from your gaming console, your phone, pull it out of the trash can. I don't know. It doesn't matter. The point is, these companies are going to buy the cheapest memory that they can because at the end of the day, 1 gigabyte equals 1 gigabyte and 1 pound of corn equals another pound of corn, unless you're going organic or something, I guess. And so let me get this straight. A company selling a product that is basically a commodity just grew their revenue by 300% year over year and more in some of their other business units. Whether these numbers mean anything to you whatsoever or mean nothing at all, I'm going to simplify it for you. The kicker out of all of this and why this stock is just absolutely broken, it's not like they're making this massive technological innovation that changes everything. They're selling memory, something that's been around for over half a century, and this is what the price looks like over time. Straight down. That's what typically happens with technology. So how in God's name are they growing revenue by over 300% in 1 year? Cost of goods sold up 10%. The money required to actually produce the memory chips, research and development up 36%. SG&A, the money used for mainly renting and marketing, all virtually flat, yet revenue's up 345%. That doesn't make any sense. So let me get this straight. Revenue is absolutely exploding while the cost is staying the same and supply is going up. They're building more factories. How is this possible? Well, if we ask our good friend over at Gemini, this is the holy grail of business: extreme operating leverage. It means the company can scale sales infinitely without needing to add staff, inventory, or infrastructure. Almost every new dollar of revenue drops straight to the bottom line as pure profit. In simple terms, this chip that they used to sell for $100 last year, they're now selling for $350 without changing a thing. This is not equal. That's a whole lot more money from doing basically nothing. So how is this possible? Well, it's essentially like selling toilet paper during COVID. When everybody thought the world was going to end and zombies were going to take over the planet in 2020, selling toilet paper became ultra profitable. People still have to wipe whether they're sick or not. How is there any parallel to the AI revolution? Well, again, memory is memory, but during COVID, when everybody had to stay inside and couldn't leave their house to go to the store anymore, they had to stock up on toilet paper. Now, during the AI gold rush, everybody has to stock up on memory. And again, there's probably 1 million different charts we could look at that show AI demand is vastly ahead of AI supply. I think we all understand that is true right now. People are skeptical that might change. We're not here to talk about that in this video. But pretty much any chart you look at is going to look something like this, just straight up. But I think to summarize this, just listen to this clip.
Now, every year, Nvidia builds about 5.5 million GPUs. If they had the ability to build 20 million, they would sell 20 million. That means that it's completely supply constrained.
I think that just about explains it. If Nvidia's making 5 million chips this year, they're going to sell out. If they were able to make 20 million chips this year, they're gonna sell out. If they were able to make 100 billion chips this year, theoretically they would sell out. We're not sure if that's true. But the point is, no matter what memory is available, the chips need it because the demand is so insatiable. And again, the deeper you go into this stuff, the more insane it gets. In the last 2 years, computing demand has increased by approximately 1 million times. One, because the compute required for you to actually use ChatGPT, Anthropic, whatever large language model you want has increased by 10,000x. Again, because these systems have more context to make them more useful for you. And second, usage has absolutely exploded. It took ChatGPT 2 months to reach 100 million users. That literally blows away any other technology we've ever seen in human history. Oh, and if that wasn't enough, this will do the trick for you. The price to rent an H100, a chip that Nvidia came out with in October 2022, is trending back up and at the same levels it was about 2 years ago. To put that into perspective, that's like Tim Cook, Apple CEO, coming out and saying, hey guys, well, we got a surprise for you. We got a brand new iPhone coming out that's going to have half the specs of the last one. Yes, we're re-releasing the iPhone 14, even though the iPhone 16 is already out and is much more performative. You might as well just bring back out the iPod Touch and re-release that, because in the world of AI, it doesn't really matter. We're gonna pay for any chip we can get, no matter how shit it is compared to the newest ones. Yes, a depreciating asset, appreciating value, that's the definition of a supply shortage. And quickly off topic, this is why these neo-cloud companies like Nebius and CoreWeave are absolutely scamming big tech companies, because they're making absolute bank off of depreciating assets. They're renting out compute and taking advantage of a massive supply shortage. You shouldn't care, it's the big companies getting ripped off, but that's why they're making so much money being essentially just middlemen, just buying Nvidia chips and then renting them out. Doesn't take the brightest person in the room to come up with a business model like that one. Props to them for executing. But back to the point, Jensen Huang is right about AI needing like 10x more compute over the next 2 years. CEO of Nvidia, who probably has the best visibility in the entire sector on what's to come in the AI market, then what should we expect from a company like Micron selling memory that is absolutely critical for compute? Well, if we need 10x more compute, I promise you we're gonna need 10 to 30x more memory. And listen, to us, the normal person, does it really matter if we see Nvidia's memory costs soar 485%? It's all good, man. You've only made $250 billion over the last 12 months, so we should feel really bad for you. No, it's not that. It's that the memory shortage is so bad because these massive conglomerates are hoarding the entire supply. Little Timmy can't even convince his mom to buy him the newest Xbox because it's too expensive. The price of the Xbox is literally skyrocketing because of memory price going up. This makes little Timmy and little kids everywhere pretty sad. So you can see how this ripple effect really spreads across the economy to not just the corporations, but the little kids trying to play the newest Call of Duty. And if you know out there, there is literally nothing like waking up Christmas morning, getting a new Call of Duty game on the newest Xbox, and gaming for the next 3 weeks straight. In any case, the natural question you might have is, well, how much longer is this gonna last? Because obviously the supply shortage is here now, but what has history told us about other times where commoditized products were overhyped, oversold, overbuilt out during a technological revolution? Any guesses? The dot-com bubble. Great observation. This right here is the price of fiber optic cables over time. As you'd expect, the normal decrease in price year over year. That's what happens with commodities. They go down in price because more competition enters the space. When supply goes up for something that has no differential value between one cable and another, then price goes down. Well, during the dot-com bubble, when everybody and their mother had an internet company, big companies started spending a lot to build out the infrastructure to handle a massive boom in internet users. The price absolutely skyrocketed and, as you might expect, came down, because that's what happens every single time with commoditized products. If there's a supply shortage, price goes up, not because the product is getting better, but because the demand just vastly outweighs the supply. This should be eerily similar and remind you of a company that If you know the dot-com bubble, you know Cisco. We saw this exact dynamic play out, an absolute spike due to a supply shortage. And what do you know, today, we're back making new highs. Kind of ominous and slightly worrisome, but this time's different. AI is a different technology, the internet. Everybody knows that, right? Back to memory, the price of memory has tanked literally 99.999% from its early beginnings. That should be expected, as we've talked about and beat the horse to death at this point. Commodities go down in value over time. And you could argue, yeah, the long-term chart, it still looks like that's the case. But this is a log scale, remember? In other words, this doesn't really do us justice. Because if we just zoom in right here, dynamic random access memory, again, it allows those AI chats to be better and to remember more of your previous conversations in context, so you don't have to repeat the same damn thing 10 times. The price of DRAM is higher than it was a decade ago. So the price of memory overall is down like 99.9999%, but the price over the past 1 to 2 years in particular is up 4 to 5x. Makes sense now that we look at Nvidia's memory costs, up 485%, making up 25% of the total cost of the chip. No wonder Micron is becoming one of the most profitable companies the world has ever seen, because they sit there doing nothing different than what they've done over the past 30 years of business and pulling a magical money printing lever. Hey, why don't we just raise the price from $100 to $200? Oh, people are still paying? Why don't we try 300? Oh, people are still paying? Why don't we try 400? You get the idea. It's like you're living in an infinite money glitch. You don't have to do anything different. You just keep raising price. You don't increase research and development. You don't increase sales and marketing costs. Eventually, surely, companies will say no, right? Well, that's not how it looks right now. Now, obviously, there's a limit, but we haven't quite reached that limit yet. And like we said, little Timmy doesn't really give a damn if memory costs for a $4.5 trillion company have went up 400 something percent. Company that made $250 billion over the past year. 81 billion last quarter. Micron, by the way, at 42 billion. So that should give you an idea, a sense of the scale of growth of money we're talking about. Micron is rivaling the profitability of Nvidia, which was thought to be literally impossible. And now it's becoming a reality. Now, at the end of the day, should you expect this cycle to continue? Is this time different? Has AI put us into a realm of we're gonna spend money forever and always get the return back? Maybe. I tend not to think so, and this is just a super cycle of growth. If history says anything, then over time, especially when it comes to commodity prices, there's boom and bust cycles. Yes, this boom cycle is probably going to look something like off this page, but eventually there will be a bust back down. Well, there's a few things we have to talk about there. So first, Micron's ability to just pull that casino lever that just gives them infinite money, that they expect to continue beyond 2027. In corporate speak, they're saying that right here, supply-demand conditions for both DRAM and NAND to remain tight beyond calendar 2027. And they're not just going to raise price, they're actually expecting to grow shipments as well. Remember, what we were talking about was just increasing the price. That's it. But they're also planning on increasing supply and increasing price. That, my friends, is how you get a commoditized stock going from $60 a share to $1,000 in about 2 years. The most extreme supply shortage the world has literally ever seen. No. And it doesn't stop there. It's not just that they're going to raise prices. It's not that they're able to do more shipments right now as more factories come online. It's the fact that they have factories that they're currently building that are not even operational yet. We are also making good progress on expanding our global manufacturing footprint to increase supply over time. This includes our significant investments in US leading-edge DRAM manufacturing, with 2 fabrication facilities in Idaho, 1 in New York, and another in Taiwan. In props to them, they actually saw this demand coming ahead of time, which is absolutely unbelievable. Yes, you and I could sit here and make a prediction that, oh, ChatGPT came out, like AI stocks are going to go up a little bit, and like memory, we're going to need memory at some point, and AI chips are going to be so valuable. We could say all those things, and we probably did, but to this extent, for their management to have enough confidence to drop $100 billion to build a mega fab in New York in 2022, I'll tell you, that's some great foresight, and it is now paying off in the financials. So right now, if you're worried about any sort of, oh my God, there's a lot of supply coming onto the market, no way, there's still going to be a shortage of memory, prices are going to come down, Micron stock is going to collapse. Their management is clearly confident. They're still bringing factories online in 2027. They're not even going to produce chips in these factories until 12 to 18 months from today. So if you're nervous, just know management is not. This growth is insane, and they're expected to make just around $50 billion next quarter. That is an ugly line, but deal with it. And hey, if you're wondering, well, where's the competition? Why isn't everybody just making memory chips? That sounds easy, right? Well, the fact that it takes, $100 billion to build out a mega fab that's not even done yet, not even producing chips 4 years later, then you got to make $100 billion worth of profit to then pay that factory off. You can see why the barrier to entry isn't exactly easy. So a company that's been around forever has the infrastructure to meet demand, not really, because they can't, they raise prices. The companies that have the infrastructure already, like SK Hynix, like Samsung, like Micron, they're doing pretty well for themselves. Now, is all this that we just talked about setting up Micron to become the next Cisco, a company that was losing money not too long ago and now is one of the most profitable companies in the world? Are we setting up for a massive cyclical downturn that will absolutely cripple your stock portfolio and the stock market all across the world? Potentially. Is this eerily similar to the fiber optic cable build out during the dot-com bubble? Yeah, it's very similar. Scary similar. Is AI a different beast? Has it changed the paradigm of investing forever? Is infinite money going to be generated from artificial intelligence? Infinite productivity? Everybody wins? Probably not. It's just going to be businesses, and that's why you have to invest in those businesses, Micron being one of them. Two things can be true. AI could be the most revolutionary technology the world has ever seen, which is pretty much unanimous, ubiquitous at this point. And revolutionary technologies like AI create massive bubbles because of overspending in the short term. That could also be true. I'll say this to conclude, at the end of the day, Micron stock is going to start struggling about 1 to 2 years before their profits peak out. Now, are we seeing that right now? Do you think 18 months from now, profits at Micron will still be not exploding as fast as they are today, but still growing because of their operating leverage, their ability to just raise price and raise supply at the same exact time? If you believe that's a year to 2 years away, then yes, now might be the time to start looking at exiting Micron and looking elsewhere. But if you believe this supply shortage that Jensen Huang is projecting till like 2030 is still going to remain, then Micron is at least a double from here, which sounds absolutely insane. It's a $1 trillion company and was worth $100 billion like 2 years ago. I remember buying this stock for the first time back in college when it was like $45 a share. So yes, it's run significantly, but the fundamentals and the dynamics that are happening right now when it comes to the AI revolution and supply not meeting the demand that's out there, they still exist, and they're very prominent. And if it makes you feel any better, if we take the inverse of whatever Morningstar fair value estimate is giving, it's usually a good sign. You can see basically anytime a growth stock grows way beyond their price target, they're gonna raise it. And the second they raise it, usually there's a massive decline in price. So again, we're seeing that. And so that's how a company selling a commoditized product is becoming one of the most profitable companies the world has ever seen, basically overnight. They prepared for this moment, they were ready for it, and now it's here, and they are absolutely printing money. They have officially broken anybody's expectation of this stock, and it probably will continue. If you feel at all for little Timmy, please consider subscribing, and I'll see you in the next one. Bye-bye now.